What's up, YouTube? This is going to be a trade recap of the trade that I just took today on NVIDIA right here. And here is the textbook example of what it is that I am looking for when I'm trading. I'm using an inside bar, outside bar, and gap fill trading strategy. And that is what provides me the key levels. And if you want to trade the same strategy, I've got a whole video breaking it down. But essentially, what an inside bar is a candle that looks like this, where it is completely inside of the bar previous to it, and then we're looking for puts on a break down below that level and calls for a break above that level. And so on the trade that I took today, I didn't exactly use that strategy, but the exact same concepts apply for this. So we've got this key level here that I was watching, and I was watching this level because we get a very clear push downwards from there, and we come back and retest it. We push down from that level again, and then in the pre-market today we were sort of testing that level, and that brings us to here where the market opened at. Now, it's very important to stay patient here, because when you're seeing these giant green candles breaking above your key level, it makes you want to jump into the trade right away. But a lot of times these trades will momentarily break above, sweep liquidity, and then actually break to the downside. So it's very important that we see acceptance above the level. And that's exactly what this textbook example is showing, is a retest, also known as acceptance above the level. So we're wanting to see price pull back into a fair value gap that it created, and then usually on the lower time frames, or in this case the same time frame, we're looking for it to then break a fair value gap back above, or you could also use a break of structure. So this is what that looks like for today. We have a huge fair value gap here as the market opened, and then we're waiting for a pullback down into that level. Now, this pullback was a lot larger than we normally see, I feel like, because the market came down along with the stock. But typically, I will scale down to the 1 minute after we are pulling back into that 5 minute fair value gap. And then on the 1 minute here, I am looking for the invalidation of the bearish fair value gap. So really all of this here would sort of be the bearish fair value gap on the 1 minute. So we're really looking for acceptance above all of this. However, you have to take the highest time frame fair value gap. So on the 2 minute, here, we still have fair value gaps, and we basically end up back here on the 5 minute where we've got this fair value gap. And so you have to take the highest time frame fair value gap that there is, and so this is where it's at. And then you could also wait for that break of structure to the upside here. And we do this because invalidating, when you invalidate this bearish fair value gap, you are also validating that buyers are stepping in here on this bullish fair value gap. So essentially what's going on is we're in bullish order flow, and then we're retesting, and then we're breaking bearish order flow on like the lower time frames here, to then respect the overall trend. And so once we broke this fair value gap here, then I felt pretty confident in entering this. And originally I was targeting a 1-to-1, because I believe consistently taking small profits is going to be the most important thing. It is going to give you confidence in your strategy when it is winning more often, rather than winning a huge amount, like 10% of the time. You're not going to feel good about taking that trade. You're not going to feel confident. And so winning a large majority of the time, but winning small, I think, is going to be huge long term. And so that's why I target a 1-to-1. I ideally would have had my stop loss down here, but it just would have been way too far. And usually this is where I would put it at, because this here is the key level, and if we break that key level, then the trade is invalidated. So that's the best spot for the stop loss. But I went ahead and put it here instead. And my thought process for that was that we have a new 5-minute bullish fair value gap here instead. And so if price wanted to come down and retest this level before breaking up, then I'd be okay with that. And so that is why my stop loss was here. And I went ahead and took profits. About 10 minutes later, the trade was up about 50%. And I went ahead and took profits right there. And then once I took profits here, I moved my stop loss to break even. And then I also have a trailing stop loss. So worst case scenario, I break even on the runners. I've already secured profit and I'm going to be green no matter what. Then I'm trailing my stop loss based on a candle close below the low of the previous candle. So let me show you what that looks like. When this candle was forming, if we closed below this candle's low, this red line, then I would have stopped out. Then once this candle closed, my stop loss was here. If this candle closed below that low, I would have stopped out. And so the stop loss continues to move, and that way I can maximize my upside and limit my downside on these runners. So as the trade kept going, the stop loss kept going, and then here we finally see a candle close below the low of the previous candle, and I went ahead and stopped out right here. So that was the trade today. I secured about $100 on this trade, but what's more impressive is that the percent return when we are trading in this range was between like 80 and like 100%, and that is massive. If I was trading with, tens of thousands of dollars, that would be a huge win. But yeah, overall, secured $100, beautiful trading day. And yeah, click like and subscribe. I'll see you in the next video.